Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 ETF. That's ticker symbol RUT. And if you're a regular follower of the market guides and our weekly market report, you'll know that these lines that I have on the chart are from previous forecasts, and I leave those on the chart so our viewers can see just how accurate technical analysis is when used as a forecasting tool. And last week I said that we would move up to test resistance, which was this horizontal line up here at the top. That's called the flat line resistance. And then I said we would most likely move lower, with the end of that line right there being my target. And as you can see here, we closed on Thursday, the 18th, this being the last trading day of this holiday week. And so Friday, the markets will not be open. But again, as you can see, we closed right at my target number. So it's pretty amazing how accurate technical analysis is, particularly candle charts. And the art of reading these charts is not something that takes years and years to do, but it does take some concentration and it takes some practice. And each and every week when I highlight these candle patterns, I'm hoping that our audience is picking up on these signals and will be able to duplicate the success with regard to that forecasting. Now, the other thing that I point out is I said that the stochastics would most likely move lower. It's done that. And right here on the 15th, the stochastics %K crossed over the %D, giving a sell signal. So that's still in place, and the momentum of the Russell 2000 is still heading lower. The CCI was also forecasted to move lower. It did that. And when it crosses below the 100 mark right there, that's that horizontal line marking 100 on that scale, that too is a sell signal. So what does that mean? Well, we have a couple of mixed signals that we have to pay attention to. Number one, the candle for today, that's a hammer pattern. That tends to be bullish. So as I back out, let me just say that this resistance is probably going to hold. And I think early next week, we might see a little bit of a rally. I don't think there's going to be much because the momentum indicators are still pointing lower. And then I think we're going to start moving lower and below that 20-period moving average, which is that blue line right there. So I'll leave that in place as is. Now, let's hop right to the VIX. That's the volatility index. I talked about that last week. I said that it's inversely related to the S&P. I didn't show a chart of the S&P, but I did forecast the VIX with great accuracy. And you can see that I said the VIX would most likely bounce off the support. Right there, that horizontal line is support, and then rally. That's exactly what happened. Now, what does that mean for next week on the VIX? Well, this is a bullish engulfing pattern with a long shadow, and the VIX closed today with a bearish engulfing pattern. So you have bullish and bearish signals back to back. So I think that the VIX could go right back down to test that support and then ultimately rally just like that. And I'm going to leave my end of the line right there at my target for next week because that would most likely bring it to the 20-period moving average. So that's the VIX. But look at the Qs. That's the Nasdaq market, QQQ. It's the ETF that we look at each and every week. I said we would move up to test resistance, and then I really thought that we would pull back from that resistance. But as you can see, we closed within pennies of that resistance. You see that? So I still think that the Qs are going to pull back next week. So all I'm going to do is move this over to the right, and I'm going to leave it pretty much at the same target level, just like that. The indicators here, the stochastics are crossing with a sell signal. I said the stochastic would move lower. It did, but the market moved higher. That's a pretty wide divergence here. When the stochastic is going down while the price is going up, that's very negative. And you can see the CCI is also going negative. Now, the big thing about the CCI is if you look at this high right here and you move straight up, you'll see that that CCI high was on this high. And we find out that on this higher high, we're having a lower high on the CCI. You see this down here? Let me just erase all these lines. I'll put that resistance in place again, but I want to really clean this up so you can understand what's going on. when you have a price divergence on the CCI, that is more significant than the stochastics. You see how that's dropping on the highs? Yet the highs are still going higher. And that's going to, again, bring us right back to that resistance point. Let me redraw that, because I could even go so far back here and start my horizontal flat line from here, connecting to that high right there and projecting out. And you'll see that all three of those highs meet exactly at that resistance line. So again, to redraw that forecast, I think that the Qs are going to drop lower. Okay, so keep that in mind and watch your downside. Protect any profits that you have at this particular point. I would suggest stops. Maybe for the option trades, you can buy some protective puts, whatever it may be, but protect those profits. Now let's look at the diamonds. The diamonds also are right at resistance. It's more or less the same thing as what we just saw in the Qs. So I'm going to move that over, and I'm going to leave that resistance in place, because that is, again, the forecast right there. I think that this gap, there's a small little gap here that will fill, and there's still a little bit of a gap left open right there. So I think that will ultimately fill as well. We could even draw that as a first level support. And if it breaks down below there, we have secondary support right there. Okay, so if you'd like to learn more about what we do at The Market Guys, just go to The Market Guys website. It's really easy. Click on the video tab right at the top, and you will be brought to our video library, where we have a series of what we call market shots. These are very short videos that are about 7 minutes long. You could get this on a coffee break, really. It's pretty easy. And I keep it simple so that you can learn about the language that we use and some of the signals. And if you're interested in learning more about our mentoring program, we're still filling seats for the summer program. It's a one-on-one mentoring program. If you want to find out if you qualify, just send me an email through the contact link. Put your name, email, and type me a message. Someone from our office will forward that to me, and I will be sure to get back with you. I love talking about the market. This coming Monday, we have an open house. Okay, it's the day after Easter. If you want to register for that, just go to the front page of The Market Guys, and you'll see right there, April 22nd at 8 p.m., you will be able to ask me questions, submit stock symbols, and I go through my rapid-fire stock analysis in that action-packed 1-hour session. So have a great holiday weekend. Happy Easter, and we'll talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.